send this email. I will. Good afternoon, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Sharewise, and we're here this afternoon with the Managing Director Ilario Faenza of Harvest Technology Group. He's been kind enough this afternoon to lend us his time and expertise towards the company, Harvest Technology. So as always, we're going to kick things off with a presentation, and then obviously we're going to open the floor up to a bit of a Q&A. I've got a couple of questions I'm really eager to ask Ilario after the presentation, but after that, ladies and gentlemen, if you have any questions you'd like me to ask Ilario, please submit them through using the Q&A function on Zoom, and I will ask away. Ilario, thank you very much for your time this afternoon. The floor is all yours.
Thank you. Thanks, Ryan. Really appreciate the opportunity. Just want to check, is the share screen up now, or do I need to reshare it?
If you could reshare for it, that would be cool.
Yeah, that's fine. No problem. Just do that now. Is that right now?
Yes, that one's working.
Okay, let's give it a crack then. Okay, so Harvest Technology Group, basically we're a hardware and software company. We specialize in making, in a nutshell, the remote possible. So what we do there is we provide a technology set of technology, hardware and software that can help you automate your vessels or automate remote equipment, hardware, whether that's vehicles, vessels, drones, etc. We have a combination of hardware and software products as displayed on the screen here. You can see some of those, including everything down to a headset that actually allows you to stream live information. We do synchronized video, audio, and data, as well as multicast video. The team is led by myself and supported by Hugh Biggerstaff in sales and marketing, Damien Brown as Chief Product Officer, and Jason Chong as the Chief Financial Officer. It's a tight team. We've been working together for a while now, and obviously been through quite a lot over the last 18 months with the restructure and everything else. Our vision and mission is basically, as I said, is to make the remote possible. So really to work with our customers on that journey. So at the moment, you've got customers that have, fully manned assets that want to become unmanned. That is not a 1 week journey or a 1 month journey or a 1 year journey. That's going to take many years for different customers. And depending on their criticality of their solutions will depend on the speed at which they move. And we see everything from commercial clients in maritime through to defence and government clients, obviously with very different requirements, and we're seeing different push and pull there, particularly in the defence sector with the increasing of budgets in Europe. And one of the key things is most of our clients are actually European based. So while we have Australian based customers, a lot of those are actually owned by European global enterprise customers. So we work with those customers and to deliver our mission and goal of helping them to reduce fatalities, injuries, and to just reduce costs, their global carbon footprint, etc. And that's broadly what we do. And we look to have a fleet of assets within our organisation, current and proposed, that allow us to be at the leading edge of that. In terms of market position, obviously we've listed on the Australian Stock Exchange. We're also trading on the Frankfurt Stock Exchange. The reason for that is that more Australian companies trade in Frankfurt than German companies. It's quite good for generating revenue. We haven't undertaken a roadshow in Europe yet. We prioritise the Asian roadshow first. We'll be doing that in September and October. So fundamentally, where we are as a listed technology provider, we have 1 year ahead of our 3-year profit plan, which I'll talk about in more detail in a second. And we're 50% of our way to EBITDA positive, which is our first key milestone that we're trying to achieve. Our recent achievements, obviously, I started, if you call it an achievement, I joined in January 2024. The first thing I did was undertake a strategic review, and I'll go through the stages on that in a moment. We're, again, 1 year ahead of plan there. And our financial model is pretty straightforward: to get as much recurring revenue as we can, to have as high margin as we possibly can, to move from one-off sales to recurring services and solutions, and to bundle our offerings where we don't just sell a one-off hardware with software licensing, but actually to bundle that and to provide effectively to ensure and look at the overall use cases. So we're delivering outcomes for customers rather than previously our pathway was to pitch a technology offering. Now we tend to pitch an actual end solution to a customer, which may incorporate third-party solutions as well. In terms of pathway to profit, the plan name is pretty simple. I want to be really clear on the fact that I don't like losses. When I joined the company, we turned over about 4.4 million last year, lost about 6 million EBITDA, which is not good. The 4.4 million revenue was a bit of a mixed bag result there. So then in FY25, we're looking at revenue over 3.6 and EBITDA will be less than 3 million loss there. There's a typo on that page actually, so apologies for that. That's an old slide. The FY26, we're expecting to be be more than 5 million revenue and EBITDA losses to be less than 1.5, and we expect to have our first profit month. FY27, we expect to accelerate that and be greater than 9 million revenue and EBITDA of greater than 1. All of this excludes our acquisition plans, which I'll talk about as well in more detail. In terms of how we sell, which is most important, we have direct sales, and when I joined the company, we're primarily direct. We also have reseller sales, and that's been an area that I've expanded significantly since joining. And in November, we undertook and managed to secure multiple new partners. We've now embedded them in, and we've seen a significant increase in our pipeline. We're obviously working to close that pipeline. I have no doubt that some of the questions that we'll have today will be about our sales. The other area that I think will be probably our largest area eventually is embedded sales. So this is where we work with companies that already have technology deployed with lots of customers, or with providers of people manufacturing drones or underwater submarines that are autonomous. And in those solutions, we're working to embed our technology in there. And I'm hoping to have some good announcements on that shortly. But we work tirelessly, particularly in defence, on integrating into specific technologies there to allow our market-leading survivable protocol to be deployed from scratch into the equipment, which means that we expect that to be deployed and be utilised for a long period of time, in excess in most cases of 5 to 10 years, we would expect. We also have consulting agents, and referral agents. So consulting agents are people that are consultants, high-level consultants that work with clients to architect solutions. We work with them. We also have referral agents, which are people who have broad networks and that come from the industry that bring us opportunities as well. So the key there being to find cost-effective ways to expand our sales footprint and our reach without continuing to increase our operating costs. Revenue streams come straightforward: hardware, software, and solution sales. When I joined, we didn't have software only. You had to buy the hardware and bundle it. While most customers prefer to buy our hardware because of the fact that it gives you the full robustness and redundancy and mission-critical environment solutions, other customers don't have such critical environments. So we've broadened our offering so that customers can buy software only, as well as they can now buy a multicast cloud-based solution as well. So we have hardware, software, and solution sales. We have recurring revenue that comes from the subscription of the software typically. We also have recurring revenue that will start kicking off because of our bundles, and that managed to increase our margins significantly. As an idea of margins, hardware is typically around 45% margin, software is over 90%, and bundling puts us in the mid-80s. So we've seen a good growth in our margins, and when our 4C comes out next week, I expect to give a more fulsome update on that. We also are adding to services. We're moving more and more towards a 24/5 solution and leveraging some of our partners based in the UK as well. And as I said, embedding, we expect to be, embedding is very much a license-based solution, as well as there's some upfront work that we get paid for to do the integration. Customer business drivers, again, is really to transition to lighter assets. So our customers have a range of issues, from not wanting to have people on board of particular vessels per se, or particular vehicles in the military space because of safety and entering into dangerous war zones, through to just reducing the load and the number of people that are working remotely on fly in, fly out. So there's a range of clients there that have different requirements there to reduce their OPEX, which also reduces their footprint in terms of their risk profile. We also have greater reduced carbon footprint. Obviously, if you reduce people flying in and out, if you do all of those things, you also reduce the carbon footprint and improve their greenhouse emissions. And MENA, of course, the main thing being that they're looking forward to improve employee conditions, allow people to work remotely so that people can come and work from a remote operations center, for example, and can drive the vessels or drive the technology or drive the drone or whatever it is that they're driving. They can drive that from a secure location on shore and not have to be as remote. We have a range of clients. We've worked with many of the world's biggest. We have industry validation, custom validation, again, from government through to commercial. Our technology offering is quite broad. Again, if you look here, we have a range of technology displayed on the screen. Most of the larger devices are now not in use. We've actually managed to shrink. So if you look at the bottom of the screen, the smaller platforms there actually are far more powerful than the larger ones. They take less footprint for our clients, therefore, which is good. They're less weight, less heat. They've all got heat sinks now. And we also have the embedded opportunity there, which is the hardware that's shown without any box around it. If you look at the headset, for example, that's a telemedicine or remote expert solution, which allows the wearer to put that on and actually communicate with people onshore or people like doctors or experts. They can help them triage a solution, whether that be medical or technical, around helping to make sure that remote assets stay up and running or to improve the recovery time of injured personnel. In terms of the core protocol, our core system at the moment is the NodeStream protocol. It's known as the world's most survivable protocol. It does synchronize video, voice data. It's highly secured anywhere, anytime. We use a 384-bit encryption, which is highly secure. On top of that, we have our proprietary encoding and decoding, which together makes for an incredibly secure solution, which is available for commercial clients as well as obviously our defence customers. It's the core foundation of pretty much everything we do. The key being here that, the NodeStream protocol can allow you to put a lot more video down smaller links. It can also allow you to do quality of service and to customize which streams or which bits of data actually get prioritized in a contested environment, which happens quite often. In terms of our competitive edge, what you look at there is we've got cross-industry compatibility. We're highly adaptable. We're also uniquely a design house, so we can take other people's technology and create an end-to-end solution. And particularly in mission-critical environments, we can architect single box solutions with everything in the one box. Like we've just built an autopilot solution, which will be offered as part of NodeStream as well. So we see those sort of features are all about enabling remote autonomy, and that's where we continue to lead. We're built from extreme environments. The technology wasn't built for video streaming of normal things. It was built for highly contested environments, very risky environments, where if assets go down, they either cost a lot of money or people can be seriously impacted. So that's what we're built for. That makes us very unique. Our competitors in the market tend to come from the higher bandwidth streaming. We actually come from the mission critical environment where it's assumed that there's nobody there to help fix the technology if it goes down. So it's built mission critical from day one. Security first protocol I've already covered, and we're very proud that we're Australian owned, Australian designed, Australian developed. So all of our tech is built in Australia, architected in Australia. We do bring chipsets obviously from overseas, but everything is built and operated there. In terms of innovation, one of the things we announced recently is Neon, which is our NodeStream Enhanced Operating Network. Very proud of this solution. It'll be rolled out during this financial year. Neon is effectively providing really bolstered remote compute. So it's edge AI can be enabled so that you can load, we believe, even full AI models at the edge, which will allow you in mission critical environments in particular to have minimal latency and to be able to ensure that the assets can be driven and controlled and monitored and run with the AI as complementary to humans, to allow the customers to get the better outcomes. So the edge AI, we're not taking bets on AI models. That's for other people to do. What we're looking at here is being the platform provider to enable AI, to allow customers to take advantage of artificial intelligence or machine learning, or just have more compute on board, whether that's a physical, a ground asset, an air asset, or a marine asset. In terms of use cases, good examples here. I've touched on a few. If you've got everything from telehealth through to obviously oil and gas compliance and monitoring, etc. You've got Remote Expert, for example, which uses a similar solution to the telehealth, which allows people onshore in hospitals or experts to actually see exactly what's going on and be able to pan, move, tilt the cameras within the headsets, etc. Obviously, we do quite a bit of work in defence, which we can't talk about too much, but suffice to say that it's obviously a big focus area at the moment for us, and obviously controlling underwater drones, airborne drones, etc. In terms of the main things we focus on, again, is remote expert defence, marine and maritime are the three biggest opportunities that we work on, and that's where our partners are focused. So when we sign reseller partners, they are very specialised. They don't tend to cover all three of those. They'll be marine or maritime, defence focused. Remote expert does cover across all sectors, but again, we very much look for people who have existing clients, existing opportunities where we can leverage our technology to bolster their solutions. Use case for defence, again, what matters here most, and where the survivability, is absolutely forefront. While we might have the highest performance protocol as well, Yeah, survivability matters most. If you can't hold the connection, if you're in a contested environment, we can run at 30% packet loss, which is huge, and maintain that connection. If you can't do that, those sort of things, then you can't work in contested environments. We can sustain up to 70% packet loss, which in contested defense environments is critical. And again, we continue to look for ways to assist that. We look for ways to also bolster the onboard compute, so that allows them to run a bit more autonomously as well. Example customer, this is a good example of a maritime customer where we're looking at embedding. So fundamentally here, the customer has more than 10,000 vessels in the field. They have navigation systems, other systems they provide a solution for. What we're doing here is deploying our hardware and software bundle with them, so that fundamentally they can provide a synchronized audio, data, and video solution as part of the navigation supplement, and that'll help them with spoofing and other issues that are going on around GPS and navigation systems. So fundamentally, if you look at the way the customer paid there, the customer would pay about $1,000 up front per vessel, and then about $500 per vessel on an ongoing basis. Typically on a 3-year contract in this case, we expect the customer life to be much greater than the 3 years, but just on a 3-year basis on just 100 vessels, that's about $1.9 million over the 3-year period. So that's where we're focusing as on the larger opportunities. They do take time. And obviously we're very excited to be announcing some soon. In terms of not to there. So that's basically the key there for us. From there, I'd be happy to take questions. So.
Thank you very much for the presentation, Ilario. That was absolutely brilliant. Kind of introduction, a bit of a deep dive into the company and its growth structure. Ladies and gentlemen, we'll kick off the Q&A. I've got a couple just to get things going. And then if you have any questions you'd like me to ask, please submit them through using the Q&A function on Zoom. Now, just to focus briefly in on yourself, Ilario, obviously,
Sure.
You've been at the company about 18 months now. Obviously, first move when you got in was a restructure. What attracted you to the company initially?
Yeah, sure. So the first thing I looked at the company is, did it have a core product, right? Did it have something worth saving? Did it have an actual solution there? So the company had quite a bit of money spent to build it. There's been a lot of criticism from people over the years as to how much the company had spent. I'm not going to get into that other than to say the company had built. It takes, you can't build everything perfectly first time. It takes several goes to get things right. So what attracted me is that it had incredible technology, had the world's most survivable protocol in terms of what it had there. It had huge opportunity. It had also customers that had hundreds of thousands of hours of actual mission critical deployments, which is really important. So they've been validated by customers, industry validated. And the main thing is that commercialization issue and just too high an operating cost base. So, the company had 39 staff, which doesn't sound like a lot, but on the revenue base and the mix of revenue and the lack of recurring revenue at the time of the problem. So the first thing I did is undertook a review between January. Obviously, undertook a quick review before I joined to make sure that it made sense for me to come in and see if I could actually materially help. Second thing I did is once I got involved and came as CEO, we spent between January and June last year just planning it and working out. We then published a 3-year plan. When I joined, there's a 14 million break-even point for the company, which is not that high, to be frank. We managed to get that down to 10 million break-even point by July. And then by November, we announced that we've got that down to 6.5 million. So we right-sized down to 17 staff. And I'll be frank, when we do these, when I've done this many times for companies, you're always really concerned if you get it right, if you get the mix right. We had some great people that we sadly had to let go, but the end result when we roll forward from November to now, so roll following, 8 months odd later, 9 months later, is we're getting more, we've got more right than wrong. And, we're now innovating quicker. So all the new hardware and the new software rollouts all occurred early this year, in this calendar year. So that all happened post restructure. And we're finding the teams moving quicker and quicker and really very focused on that. So we've got new features like video recording and playback coming out. Obviously, Neon's a big one for us as well. We've just built an autopilot solution module as well. I mean, these are pretty significant things. And it's rare and I'm very proud that it's rare for Australian companies to actually engineer at this level. We really are truly manufacturing from scratch, which is great. So what attracted me was several things. It was the fact that the company had had a product that actually meant something. It has a product that has a much wider opportunity than the company had looked at previously. Like most tech companies, it had focused on building the tech, not commercializing the technology. So fundamentally, there, that was of appeal. Being publicly listed, I'm used to running ASX companies, so it wasn't a concern for me. But
Yeah.
doing a turnaround in a publicly listed company is always fun because you have to
Yeah.
announce so many things, and everybody gets to watch everything you do, and everybody has an opinion, which is fine. The advantage of being a public company is obviously when you go through that journey, then you hope for a re-rate. So we're not quite there yet. We're 18 months in. Where we are now is a year ahead, and I'm very proud that we've got there. But my focus again is very much around profitability and sustainable
Yeah.
revenue. So
Yeah.
we've reshaped our client base. There's some clients that that we deal with differently than we did before. There's a
Yeah.
lot of clients when I joined that were getting a lot of attention, to be frank, for low revenue. It didn't
Yeah.
make sense. So it's just getting that mix right, and really focusing on the opportunities. It's like when I was in my early 20s, I used to win deals that were worth $1 million. And then I suddenly started winning deals worth 10 million. The simple difference was I only chased the deals worth 10 million. So I could only win a larger deal. And that's what we've been
Yeah.
doing here. But when you take over an operating company that has existing clients, you can't just radically change that model day one. And you need to continue to support and work with the existing client base as well. So.
Yeah. Brilliant. Okay. Um, just again to shift gears here, thank you for that one. Now, obviously, the most survivable tech solution is a great bumper sticker. Just you have to excuse my ignorance here. Can you just go through what that actually means?
Yeah, so we had some a NATO client of ours did I'm going to say a shootout, probably terrible wording around defense client, but basically they got us and a bunch of other technology providers that were streams from a video streaming point of view to begin with. A lot of people look at
Yep.
video streaming. We unusually do everything in one bundle. So a lot
Yep.
of our so-called competitors just video stream. So that's
Okay.
great, but you might want to have your data and your audio synchronized with that. And
Yep.
also it's around logging and events. If you think about things going wrong, you want to track that. So what they did is took it. They did a bunch of testing from performance based, etc., and we won on all fronts. But on the survivability was the one they really called out to us and made a big deal with us on. Is what happened was they basically kept just dropping the bandwidth and just jamming the bandwidth like a battlefield environment to see who could hold on. Because it
Yep.
doesn't matter what your performance is. If you drop the link, you drop the link and you've now got zero, right? So it's
Yep.
about actual performance, not theoretical.
Okay.
Although we did win on the theoretical as well. So fundamentally what they did, they dropped the link down to 100 kilobits and we were still able to stream video very well. Only us and I think one other. At
Yep.
32 kilobits, we can still provide video. Admittedly, I'll say at 32 kilobits, it's a bit more like getting still shots, but you can
Yep.
still have some situational awareness. At 8 kilobits, we can still stream audio. But the key thing was we were the only one that came back up every time. So they then kill the link completely.
Yep.
And then they bring the link back up and see how long you take to restart and if you needed
Yep.
manual intervention. Because if you need manual intervention, that's not really going to work in defense environments in most cases, unless it's in peacetime and they're just doing trials. So we were
Yep.
the one that came up. We're the only one that came back up every time. So that was why we call it we regard as the most survivable protocol.
All right. Brilliant. Well, thank you very much for the explanation.
Hopefully that made sense. So
Yeah, no, it did. It did. So just to shift back to my original questions, obviously you've undergone the restructure.
mhm.
Obviously significantly reducing the required revenue required for profitability. Now, what is your approach in expanding as revenue grows beyond that break-even point?
100%. Well, you can't cost save your way to win, right? You can only just restructure to rebalance the team and then off you go. So obviously this year we've set a revenue target of about 5 million, which we expect to beat and
Yep.
hope to beat. And if we do that, we'll be profitable by Q4. And then we expect to then grow to 9 million plus in FY27. Now, I didn't come in to run a 10 million revenue business. So I'm going to go
Yeah.
slightly off script here. We fundamentally, if we look ahead, a few years ahead, I expect this business to be 50 million plus revenue. Now, I'm not forecasting it. I'm not putting myself on the line for that. But obviously, that's what I came here to run. It's a much larger business with a much larger market cap. And the
Yep.
way we'll get there is several ways. We'll do that via organic growth. So we continue to expand the use cases to find more customers and more segments that can use our technology. We look to obviously expand our resellers and our partners who are very focused in different segments. But the other thing we need to do is to actually fill those reseller partners with a broader set of products. At the moment, we're pretty narrow in terms of what we provide. We provide node stream products and we provide Neon's going to be a big game changer for us in a lot of ways. But there's a lot of
Yep.
other things that you can provide in that because one of the issues that we have is we go into clients and we've got a project that requires all of these things. We provide quite a very critical set of products, but there's a lot more going on in that project. So fundamentally, we want to be a bigger part of that project, and we
Okay.
want to be a bigger part of the client spend, and be more critical to them in terms of not just critical of that, but actually helping them with the use case and actually selling them use cases. And that's how we pitch now. We don't
Yeah.
pitch of technology. We say, here's a use case, and we price it up for them from there.
Yeah.
So that's what we see. And then separately, to accelerate that, my background, obviously, I'm an M&A guy. I've had bought and sold a lot of companies from my own and others, and restructured a lot of businesses. So we're always on the lookout for good acquisitions as well, which I can break down a bit further if you'd like. So we think between organic growth or acquisitive growth there, and particularly focused on profitable companies, we think we can build quite a sustainable business.
Well, let's maintain this focus on M&A opportunities. Obviously, are you seeing many strategic opportunities that could meaningfully impact the company from a
Yeah,
strategic and profitability perspective?
yeah, there's two types of companies that we look at. One is we look for innovative companies who built great tech,
Yeah.
who are at a stage, there's a lot of companies that spend $5 or $10 million to build great tech privately. Then they need to scale. And the problem is,
Yeah.
developing a tech is one thing, but when you need to go and hire enterprise grade sales reps, it costs a lot. And it not only costs a lot, they're tough to get. Like, why would they
Yeah.
leave the place they are to come and help with a startup? So there's a high cost to go from developing the tech. A lot of people think you build the tech and you get some validation, get your first customer, and then rivers of gold come. Well, unfortunately, that's not how it works,
Yeah.
right? So there's a lot of work from building the tech, and it's like there's always different stages. Like, you've got the stage of building it, then you've got the stage of commercializing it, etc. You've always got to focus on your next sprint, your next stage, but always in the view of what's the long-term plan. So we see also a lot of those companies that are private have had shareholders in them for quite some time who are looking for liquidity opportunities. Obviously,
Yeah.
there's some tax and capital gains changes that are occurring at the moment that drive some of that as well for abnormally. So we look for that, but we're really looking for companies that can accelerate, where we can meaningfully accelerate them quickly, and very, very mindful of our operating cost base, though, because generally those companies will come with losses. So that's one side. The other side, which is the more current focus, is really around profitable companies that are established. So what we're looking for there, and we have several opportunities that we're working through now in due diligence, is companies that are well established, have been around for between 5 to 15 years is typical, where there's a valid reason for the owner to want to migrate on, which might be that business has hit the cap of what they can achieve with their own self-funding. Generally, those companies are 100% self-funded, no external capital involved, which is good, makes it easier. And what we look for is that they've got a welded-on customer base that is really loyal to them, that where they're providing a solution that is absolutely materially critical to those customers. So it's not an optional sort of solution, something they desperately need to have. So
Yeah.
so there's a lot of different companies in that space we're looking at the moment. And what I always say to people is most M&A deals shouldn't happen because they're predicated on cost savings. When we're looking at deals here in particular, we look at the growth opportunities from them less than cost savings. We're a subscale business right now. We're 17 staff, which is functioning really well. But as we grow, we're looking for being able to fill in gaps as well, and some
Yeah.
opportunities there. So it might be, if we combine tech teams between us and acquisition, it might be that we have part-time user interface developers, etc., that we can now have full-time. So there's opportunities like that come out that actually help build a better base platform of our business, which allows us to continue to move to the next level.
Okay. All right. Brilliant. Thank you for that one. Now, just from the other side of that, because of the current size of the company and the strong base that you currently have from a tech platform perspective, do you guys see yourself as a potential target for other large companies?
Yeah, I mean, look, we occasionally get approached by companies, who think they can grab us on the cheap. I've talked before in other videos that I believe we're below, a fundamental breakup valuation. It's one of the things
Yeah.
I did when I walked in, and I said, look, if I did have to break the company up, what would it be worth? And I believe it's considerably higher on that. But I mean, we're not looking to be taken out. Certainly not at this level. I think
Yeah.
it's like anything. There's a price that you'll hold an asset, and there's a price you'll sell an asset. And
Yeah.
I think what we'd hope to do, I think, is to see opportunities to potentially license into particular segments rather than sell the company. But
Yeah.
again, look, we're a public company. Somebody shows up, makes the right offer. I mean, that's
Yeah.
for the shareholders
Everyone's
to
got that
decide.
one.
Well, exactly. It's not. I mean, I think one of the things that we find in the road shows is because I've been a founder many times, but because I've commercialized and sold and been involved in so many transactions, I'm an investing CEO. I've written checks
Yeah.
here. I wrote a check recently for $500,000 into the company as an investment. So, I'm not just asking people to back it. I'm writing the checks myself, and obviously bringing in
Yeah.
people we know. So yeah, from that point of view, we're always open to a deal. That's what we're here for. So.
Yeah, brilliant. All right, well, thank you for that one. One last one for me before we open up to the floor. Just to get down into the nitty gritty, obviously your balance sheet's currently carrying a few convertible note instruments. Plans
That was a
insofar as
very polite way of
justifying.
saying it. Yeah, we are
Yeah.
carrying about a $10 million debt load. So look, it's friendly. I will say, that the parties that have provided those convertible notes have been very supportive. I mean, you couldn't ask for better support from those investor groups. And in particular, one of them came in last year to back the turnaround and has bought significantly on market as well. So that's a
Yeah.
great sign there. Look, we're obviously working with those parties and we're looking at opportunities to syndicate out some of that debt and clean that up. Very, very big focus for this year. Yeah, if you look at FY25, really it was about right sizing the company and just balancing the plan and getting ready to move forward. FY26 is we want to drive to, so we finish the year in a profitable position and continue to be so. But what we need to do is to make sure we've cleaned up the balance sheet as well. So very much focused on FY26 to, as soon as possible, but I can't predict exactly when, but during FY26 to clean up our debt load.
Yeah. Okay. Brilliant. All right. Appreciate the update on that one. Just one last more to wrap things up for today from the floor. An individual asked, can you please speak about the autopilot solution and how that is aligned with Harvest core business?
Yeah, sure. So we have fundamentally we have lots of customers who want to integrate autopilot, etc. And from our point of view, we have enough demand there that we've integrated. We've integrated autopilot before for defense projects, so we've worked specifically to integrate some really interesting tech, which unfortunately I can't really brief anyone on. But
Yeah.
we've done it before, so we decided to take a commercial autopilot solution. We've now bundled that in, so it's part of NoStream. So that provides the autopilot. It means because it's wrapped within the NoStream umbrella, all of our security and encoding and everything is there as well. So that helps reduce the hackability of the autopilot, for example. So that's one example of why.
Yeah.
And we'll be rolling out. So not to steal the thunder of my dev team who are currently putting forward, but just drafting an announcement
Yeah.
for us. Is we will be doing a rundown on additional use cases and
Yeah.
specifically around the autopilot functionality. But it's a good example of what we're looking to add. We have added some really interesting stuff to the tech before. Again, it's because we're a design house, and that's where, again, we look to clients, particularly on embedding, and say, look, we don't just go and say, here's our module, good luck, So
Yeah.
that's
Yeah.
that's not really, that doesn't work. We generally get lots of companies send us their tech, and we pull it apart, and then we architect and tell them how we would re-engineer that. And
Yeah.
in some cases, we've created single PCB boards. I mean, it's really, really fascinating that Australian company can do this, and we do it with such a small headcount. So yeah, so that's what we do, and but particularly autopilot function, we think will be quite popular with customers. It's an out-of-the-box solution with all the transport layer and everything, all the security protocols built in.
All right. Well, thank you for that one. Now, that about wraps everything up. Before we close it out, would you like to leave us with anything?
Oh yeah, just that obviously the 4C's out next week. So it's our quarterly cash report. It's always fun. And that'll be coming out. I'm looking forward to that. We'll be giving a fulsome update. And as usual, we'll be doing a video interview and article as well. And then we'll set up through Alto Capital. There'll be rolling opportunities for shareholders. Get on the phone. Most people on the video, most people know me. You can get on and ask me pretty much any question. If I legally can't answer it, I will. And we normally stay on for them until we've satisfied that. So really appreciate Sharewise for taking the time. Thanks, guys. I
Thank you very
appreciate that.
much.
Appreciate everybody for joining today. Apologies, I'm fighting a flu, so I'm sorry if that was a little bit off kilter compared to normal. So,
All right. Beautiful. Well, Larry, thank you very much for your time today, mate. Really appreciate it. Ladies and gentlemen, thank you very much. Enjoy the rest of your day and enjoy your weekend. Cheers.
thanks, Ryan. You too. Chat.